Good morning, adoring fans, people that have never met me before. David Littlejohn Financial Services, and Chief Technical Analyst at Bigfoot Investments. Taking an opportunity this morning because I've been fielding a lot of questions recently. As you no doubt know, the government is currently shut down. We're in somewhat of a political impasse, and while most of us are fairly confident that it will eventually be resolved, the market is taking an interesting position on this. And so what I wanted to do was, because I'm getting so many questions about it, spend a quick minute in the video, talk about what's going on. Now, the bigger picture story, I believe, and again, some of this is just this analyst's opinion, is still about quantitative easing. When you have a government that's pumping literally $80 billion a month into the system, that's going to have some influence on where the price of underlying equities and bonds go. Nonetheless, every now and then, something that we call a systemic risk shows up. And systemic risk is something that affects everything. Okay, and that's what this political shenanigan is doing for us right now. When politicians can't make their mind up, then that is a systemic risk. Every ship is going to rise or fall with the tide in this case. So here's what I believe is going on. I think that the market's been on a long-term trend, and if I were to back this chart out and show you this long-term trend, it's been going on since somewhere beginning in roughly November of 2012. Here we are today, and you can see this is back in August. We had a decline, and we kind of had a run back up, and we're seeing down here, this is a support line I want to draw your attention to. There's a purple line right here that's still moving up toward the 1700 number, which is sort of where I believe the market is trying to go based on QE and trying to, sort of shoehorn in traditional analysis. Oh, well, we have dividend rates that look like this, or we have bond rates and yields, that we should justify this price. Not important right now. We get to throw a lot of that traditional analysis out the window. And instead, let's just look at what the market's giving us and what it's telling us. So let's try to reverse engineer. Market tells us this, what does that mean? Here's what I think it means. This purple line right here, okay, October 17th, that is the theoretical point at which our government will default on its debt if we do not come up with some kind of funding mechanism. If we don't authorize the raising of the debt ceiling, then the checks that we've already written won't get cashed. We will be in some form of default. Now, it won't be a full-fledged default. It will be like a bankruptcy where you're going to pay back a certain portion on each dollar. Nonetheless, it's going to hurt the faith and credit of the United States. So here's what I think the market's doing. The market wants to go up. However, with politicians doing what they're doing, it can't. Okay, the market has to take a wait-and-see approach. And this line here is sort of, and it's tough to draw a curve with the software I'm using, but you get the idea that the market can sort of drag its way down to about 1665 or so right in here. And if we get to this point in time without a solution, I think that that support goes away and we can fall off a cliff at that point. We reevaluate everything. But until that happens, the market's going to penalize, okay, for those of you that know about options, it's sort of like time decay. Okay, so over time, the longer we go without a solution, the more the market's going to penalize us and start to drag down. But everybody's operating under the assumption they're going to fix it. We're going to kick the can down the road, which makes sense. What politician wants to get caught holding the bag when America goes bankrupt? So odds are we get a solution. And when that happens, I think we move right back up into this channel, kind of like a weather forecast, right? Well, so here we go. We'll lift back in here. And when that happens, the market goes. So essentially, every time we get a dip, we have a certain group making the assumption that, hey, things will be okay. They come in and start buying, and they collect down here, and it pushes the price back up. And then that's why you have sort of this sideways move. But the longer it goes, the more likely people are going to get uncomfortable with this, and the market is going to price that in. Okay, it's going to price uncertainty in. So track this, and maybe what we can do is we'll revisit this in a few more days. We're about 10 days out. Today is October 7th, so 10 days out. That's less than 2 weeks of actual market days. So we've got 8 market days to make this call, 10 calendar days. So we'll see what happens here. But anyway, that's what I would draw your attention to right now. Take a look at this. I'll keep this updated on the blog as well so you can see it. The blog is available. Go to littlejohnfs.com, look under the blog section, and you can see sort of my comments on what's going on here. And if you have questions, I encourage you add a comment or send an email through littlejohnfs.com to info@littlejohnfs.com, and we'll see what we can do to get that question answered for you. Nonetheless, I hope this helps right now. I would tell you, remain calm under the assumption that our politicians get their heads screwed back on. We will probably move back up into a trading channel. Meanwhile, we're going to float somewhere between 1680 and 1690 while we make that decision. If we fall below here, that's when we're going to reevaluate our assumptions. But for the time being, I think the story is unchanged. Just relax, still take a somewhat longer term view of this. Should the information change, then we'll have to update our assumptions. But for the time being, market's nervous for good reason, but we have every reason to continue to be optimistic that we'll get this thing solved. All right, well, this has been David Littlejohn, and as I like to say to my clients after we go through something like this, you've been schooled.